Look at the modern financial world. Banks, stock markets, shares, corporations, global capital flows. It all feels inevitable, as if this system always existed. But it did not. At one point in history, none of this was real. Money did not move through systems. It moved through people, through trust, through risk, through violence. And then something changed, not in an empire, not under a king, not through conquest, but inside a small city built on water, Amsterdam. Before Amsterdam, wealth was fragile. Merchants traveled with gold on ships that could sink. Caravans crossed land where thieves and wars erased fortunes overnight. A single storm could destroy a lifetime of work. Trade existed, but finance did not. There was no system to protect capital, no structure to spread risk, no mechanism to turn private money into collective power. Wealth was personal, and that made it weak. Amsterdam entered history at the perfect moment. The world was expanding. Trade routes stretched across oceans. Spices flowed from Asia. Silver poured in from the Americas. Goods moved faster than governments could control them. Empires tried to dominate this chaos. But Amsterdam did something different. It organized it. The city did not try to rule the world with armies. It ruled it with structure, with rules, with contracts, with accounting, with trust that did not depend on bloodlines or religion. Amsterdam turned money into something new, something abstract, something transferable, something scalable, something powerful. Here is the key shift. Before Amsterdam, if a merchant failed, everything collapsed. His ships, his debts, his family, his reputation. Risk was total. That fear limited growth, because people only risked what they could personally afford to lose. Amsterdam broke this rule. For the first time, risk was shared. A ship did not belong to one man. It belonged to many investors. If one ship failed, the system survived. Losses were absorbed. Capital lived on. This single idea changed everything. And then came the most radical innovation of all. Ownership without control. Amsterdam allowed people to invest in businesses without running them. They could buy shares. They could sell shares. They could exit without destroying the enterprise. This sounds normal today. Back then, it was revolutionary. This is where modern capitalism is born, not from greed, from risk management, from the desire to protect wealth from chaos, from the realization that systems outlive individuals. Amsterdam did not invent money. It invented financial continuity, money that survived storms, money that survived wars, money that survived human error, money that lived inside rules instead of bodies. And the city knew something most empires never learned. Power does not come from owning resources. Power comes from controlling how resources move. Amsterdam became the place where money felt safe. And when money feels safe, it gathers. Capital from across Europe flowed into the city. Not because Amsterdam was the richest, but because it was the most predictable. Trust became its currency. Stability became its weapon. By the end of this transformation, something strange had happened. Amsterdam did not just trade goods. It traded expectations, future profits, future voyages, future success. The future itself became financialized. And once the future can be priced, it can be bought. It can be sold. It can be controlled. For the first time, risk was shared. A ship did not belong to one man. It belonged to many investors. If one ship failed, the system survived. Losses were absorbed. Capital lived on. This single idea changed everything. And then came the most radical innovation of all. Ownership without control. Amsterdam allowed people to invest in businesses without running them. They could buy shares. They could sell shares. They could exit without destroying the enterprise. This sounds normal today. Back then, it was revolutionary. This is where modern capitalism is born, not from greed, from risk management, from the desire to protect wealth from chaos, from the realization that systems outlive individuals. Amsterdam did not invent money. It invented financial continuity, money that survived storms, money that survived wars, money that survived human error, money that lived inside rules instead of bodies. And the city knew something most empires never learned. Power does not come from owning resources. Power comes from controlling how resources move. Amsterdam became the place where money felt safe. And when money feels safe, it gathers. Capital from across Europe flowed into the city. Not because Amsterdam was the richest, but because it was the most predictable. Trust became its currency. Stability became its weapon. By the end of this transformation, something strange had happened. Amsterdam did not just trade goods. It traded expectations, future profits, future voyages, future success. The future itself became financialized. And once the future can be priced, it can be bought. It can be sold. It can be controlled. Amsterdam did not just invent financial tools. It created something far more dangerous. A place where money began to behave independently of the people who created it. A place where capital developed instincts, fear, hope, momentum. Before Amsterdam, trade happened in fragments. A ship arrived. Goods were sold, the story ended. Profit was realized only at the end of a journey, after months or years of uncertainty. Amsterdam changed this by compressing time. It pulled the future into the present. At the heart of this transformation stood a single institution, the stock exchange. Not as we imagine it today, filled with screens and algorithms, but as a physical space where people gathered daily to price expectations. Not goods, expectations. Here is the crucial shift. People were no longer trading spices or ships. They were trading belief. Belief that a voyage would succeed. Belief that demand would rise. Belief that others would believe the same thing tomorrow. This is when finance stops being about objects and starts being about psychology. In Amsterdam, prices moved even when nothing physical changed. No ship had arrived. No cargo had been unloaded. No news had traveled across oceans. And yet prices rose or collapsed. Why? Because perception had shifted. This was new, and nobody fully understood what they had unleashed. Markets began to react faster than reality itself. Rumors traveled quicker than ships. Panic spread faster than fire. Optimism inflated values before profits even existed. For the first time in history, money was reacting to money. This is how speculation is born, not from stupidity, from structure, from the realization that if prices move based on belief, then belief itself becomes a tradable asset. And once belief can be traded, it can be manipulated. Amsterdam did not create greed. It created leverage, the ability to amplify small emotions into massive financial movements. One whisper could move fortunes. One doubt could erase years of wealth. This was thrilling and terrifying, because the system was now bigger than any individual participant. No single merchant controlled it. No single ruler could command it. The market had a logic of its own. People began to notice something unsettling. Markets remembered. They developed patterns. Booms followed busts. Confidence followed recovery. Excess followed success. A rhythm emerged. And once a rhythm exists, people try to dance to it. This is when financial behavior changes. Investors stop asking, is this valuable? They start asking, will others think it is valuable? This single mental shift changes everything. Amsterdam traders learned to read crowds, to sense mood, to feel momentum, to anticipate fear before it appeared. The best traders were not the smartest, they were the most emotionally disciplined. And this is where finance begins to separate winners from survivors. Those who respected the system adapted. Those who believed they controlled it were destroyed. The most famous example came suddenly. The tulip mania, often mocked as foolish. But that misses the point. Tulips were not the story. The system was. Tulips became valuable because the market structure allowed future prices to be traded today. People bought contracts, not flowers. They bought the idea of selling later at a higher price. This was not madness. It was a preview of modern finance. When belief detaches from reality, prices float. And when reality returns, gravity does not negotiate. Amsterdam learned this lesson early. Painfully, fortunes vanished, families collapsed. But the system survived. That is the key. Because systems do not feel regret. They do not panic. They do not apologize. They absorb failure and continue. Amsterdam did not abandon finance after speculation hurt people. It refined it. Rules were added. Clearing mechanisms improved. Trust was formalized. The machine learned. This is what made Amsterdam unstoppable. Not perfection, adaptation. And now the most important consequence appears. Once markets exist, governments change. Because states can borrow, and borrowing changes power forever. War no longer requires gold up front. It requires credit. And credit flows where markets exist. Amsterdam showed the world something radical. You do not need to conquer territory to gain power. You need to control capital allocation, the ability to decide what gets funded and what does not. This idea spreads fast. Other cities watch closely. Some imitate, some resist, but all are affected. Because once money learns how to move on its own, no ruler can fully stop it. In the next part, everything escalates. We will see how this financial logic migrates, how it reshapes governments, how it turns states into debt managers, and how the world quietly transitions from rule by kings to rule by balance sheets. If you are starting to see modern finance reflected in this story, that is intentional. Because nothing you experience today is new. It was tested here first, in a city built on water. At some point, something irreversible happened. Markets stopped serving governments. Governments began serving markets. Not through conspiracy, not through secret meetings, through structure. Once Amsterdam proved that capital could be organized, priced, and mobilized faster than armies, rulers everywhere faced the same realization. Power had changed shape. Before this moment, power was visible. It wore crowns. It marched in uniforms. It occupied territory. After this moment, power became abstract, quiet, mobile, relentless. A king could command soldiers, but he could not command confidence. And confidence is what markets trade. This is the shift most people never notice. States stopped being owners of money, they became borrowers. And borrowers always answer to lenders. Once governments discovered debt, everything changed. War could be fought before money existed. Infrastructure could be built using future promises. Empires could expand without immediate cost. At least, that is what it looked like. But debt is a hidden rule. It never forgets. Amsterdam taught the world how to issue bonds, not as charity, as instruments, tradable promises backed by taxation. Meaning this, citizens became collateral. Every bridge, every warship, every palace, paid for by future labor. This is not moral judgment. This is mechanical reality. As debt markets deepened, rulers lost something critical, optionality. They could no longer act freely. They had to maintain credibility. They had to reassure lenders. They had to keep interest rates stable. They had to protect confidence. Markets do not care about legitimacy. They care about repayment. And slowly, subtly, governments adapted, not by force, by necessity. States began structuring themselves to look reliable, predictable, bureaucratic, consistent. Sudden changes became dangerous. Populism became risky. Uncertainty became expensive. This is how politics becomes managerial, not visionary, not heroic, administrative. The ruler stops asking, what should we do? He starts asking, what will markets tolerate? Amsterdam did not intend to reshape global governance, but it did. Because once debt exists, sovereignty becomes conditional. Now the system spreads, London adopts it. Paris experiments with it. Later, New York perfects it. Each iteration grows larger, faster, more abstract. By the time modern central banking emerges, the logic is complete. Money is no longer tied to metal, it is tied to trust. And trust is priced daily. Here is the uncomfortable truth. Markets are not controlled, they are managed. And management is not dominance, it is negotiation. Every government negotiates with capital, every policy sends signals, every decision is evaluated. Even revolutions do not escape this. They borrow, they issue debt, they promise repayment, they become legible to markets, or they collapse. This is why modern power feels invisible, because it is not located in a palace. It exists in balance sheets, yield curves, credit spreads, confidence indices. And the most powerful actors are not rulers, they are allocators, those who decide where capital flows, and where it does not. This is why markets survive regimes. Empires fall, currencies collapse, flags change, but financial systems adapt. They absorb shocks, they reprice risk, they continue. Amsterdam was the first place where this became obvious, where money stopped being a tool and became an environment you live inside, whether you participate or not. If this story feels unsettling, that is because it should. It explains why modern life feels constrained, why governments seem cautious, why crises repeat, why wealth concentrates. It is not because leaders are weak, it is because the system rewards stability over courage and punishes unpredictability faster than morality. This is not the end of the story, it is the beginning of the modern era. From here we move forward, into Venice, into empires that weaponized trade, into individuals who mastered finance without ruling territory, into moments where money decided history before battles were fought. And once you see this pattern, you will never unsee it. Because it is still running, every day, everywhere. If this changed how you see history, stay with us, because we are not telling stories. We are revealing the machinery behind them,